Ritu, a first-time investor, doesn't really know where to invest. She's been suggested index funds. Are they suitable? She wants to know.
Well, yes, I think index funds can be a suitable option for her. In case of a new investor, the biggest advantage that index funds provide is that they greatly simplify choice, because the only two parameters that matter in case of index funds is expense ratios and tracking error. And one can simply go with a fund which offers one of the lowest combinations of expense ratio and tracking error. The other big advantage of index funds for a new investor is that they largely confine to a universe of large cap stocks, which I believe is more suitable for a new investor, because these stocks tend to be relatively less volatile with the ups and downs of the equity market than mid caps and small caps. And this helps a new investor familiarize with the way equity markets work without making them panic away from the market if they were to drop suddenly. So from these perspectives, index funds do appear as a reasonably good choice. But I'll also suggest her to look at aggressive hybrid funds, which we generally prefer suggesting to new investors. That's because these funds invest about 25% of your money in bonds, which do not move, which do not rise or fall with the ups and downs of the equity market. And therefore, their presence in the portfolio provides a much needed cushion when equity markets witness a sharp correction. And that can be a great source of comfort for a new investor. So I suggest that she can look at index funds or aggressive hybrid funds for her investing needs. And more broadly, I'll suggest her to remain disciplined through the ups and downs of the market and continue to invest without getting too faced by periods of exuberance or sharp market corrections. And if she does that, by and large, she should be fine.